Question. The original amount of preference share capital should be transferred to dash account in the time of amalgamation in the books of vendor company. Options. A. Equity shareholders. Option B. Preference shareholders. Option C. Debenture holders. Option D. Vendors. Answer. Option B. Preference shareholders. Dash method, the amount of depreciation expenses remains same throughout the useful life of a fixed assets. Options A. Straight line method. Option B. Annuity methods. Option C. Purchase value methods. Option D. Written down value methods. Answer. Option A. Straight line method. Depreciation arises because of dash. Option A. Abnormal quality. Option B. Normal wear and tear. Option C. Excessive use of a product. Option D. Low quality product. Answer. Option B. Normal wear and tear. Which type of asset class include those assets which have only definite use and become valueless when the yield is over? Options. A. Fixed asset. Option B. Current asset. Option C. Fictitious asset. Option D. Wasting asset. Answer. Option D. Wasting asset. Financial account is concerned with dash. Options. A. Recording of business expenses and revenue. Option B. Recording of costs of products and services. Option C. Recording of day-to-day business transactions. Option D. None of the above. Answer. Option C. Recording of day-to-day business transactions. Accounting principles are generally based upon option A. Practicability. Option B. Subjectivity. Option C. Convenience in recording. Option D. None of the above. Answer. Option A. Practicability. The system of recording based on dual aspect concept is called option A. Double entry system. Option B. Double account system. Option C. Single entry system. Option D. All the above. Answer. Option A. Double entry system. Fixed assets and current assets are categorized as per concept of option A. Separate entity. Option B. Going concern. Option C. Consistency. Option D. Time period. Answer. Option B. Going concern. Accounting standards and standards on auditing establish standards which have to be compiled with to ensure that financial statements are prepared in accordance with options A. Generally acceptable audit procedure. Option B. Accounting principles. Option C. Indian accounting standards. Option D. Accounting standards. Answer. Option A. Generally acceptable audit procedure. Change in accounting estimate is options A. Prior period item. Option B. Change in accounting policy. Option C. Extraordinary item. Option D. Ordinary item. Answer. Option B. Change in accounting policy.